Hey everybody, welcome to Zoe's Treasures. My name's Tracy, and I am here with my husband Noel. He's behind the scenes doing those graphics right there. Tonight we are going to talk about, hello Tiny the Artist, how are you? Good evening Southern Charm. We're gonna talk about taxes tonight. So basically, I have a topic to talk about, but it's kind of like a reserved topic. Hello Everhome Collection. So I'm really here to answer any questions that you may have. If you don't know me, I'll do a quick introduction. Besides saying my name is Tracy, hello. I am a CPA. I have about little over 30 years experience. I used to be a CFO at a nonprofit. I work currently, my 9-to-5 is in a large global accounting firm. I do have a master's degree in taxation. So I have a little bit of experience to draw from and some education. And I used to do tax work. I used to do audit work. And that's what I use to bring this to Whatnot. So any questions you may have about taxes, thank you for your purchase from the bin. And since you got that, I'm going to talk about those really quick. Y'all, the giveaways tonight, let me run one of the giveaways here. Let me get over here. The giveaways tonight are a CEO affirmation cards. So these are affirmation cards that I created myself. They are a deck of cards. You're going to get one as the giveaway. And it is, you're going to get anywhere from week 1 through 7 card. And on the back of the cards, they have our weekly affirmation. So every week I have a different affirmation that I read on Fridays, Friday mornings at my talk show that I do. I do a 2-hour talk show from 7 to 9 every Friday morning. First hour is focused on business. Second hour is focused on tax. And so I thought we would go ahead and do cards. So the giveaway says you get one of these and a vintage postcard, but we are doing something new at Zoe's Treasures. Every giveaway is actually going to get 2 of these, one for you to keep and one for you to give. So kind of just trying to spread the love a little bit. If you don't want to wait and just see what you get in the mail, if you win one of these, we do have decks of the cards. I have a few left in the bin. So we do have the full 52 deck plus a couple extra cards. If you are interested, this is kind of what they look like there. They have my logo thing, and then you get a deck of cards with some extras. So that is there if you are interested. All right. So let's talk. Thank you so much. I love the idea myself. I'm a big believer in positive thinking and affirmations and visualization. And so I try to bring that to in a business perspective. So for taxes tonight, I thought I would try something a little bit different with this one. So my Friday evenings, we're trying to keep it around an hour. I'll stay on longer if there's questions. So besides trying to answer any question you may have, so feel free to put them in the chat, I was going to start working our way through a Schedule C. So tonight we're going to talk about just one section. Next Friday, I was going to talk about revenue. The next week after that, about expenses. And I already have, if you go and look in the shows, you'll see all the shows I have scheduled for the next 8 or so weeks, and kind of a different topic that walks you through every single part of the Schedule C. So if you follow along, if you're over there filling out your tax forms, and if you don't mind waiting a little bit, you can hang out every Friday night, and we're going to go through the whole Schedule C, and you can fill it out as we go. And by April 15th, you'll have a completed Schedule C. So that's what I was going to kind of just start talking about. And while I keep an eye out, date night. Hey, this is a hot date night. Let me tell you. My husband can attest how many nights I've sat there and talked about taxes. It's like what do they say? Red wine and oysters? Tax talk, telling you.
Nothing like tax talk.
All right. We do have, I did not put in the show notes, but if you have ever gotten anything from me, we have our own rewards cards we send out. And every box that goes out of our home here, we put a rewards card. There is a coupon code on the back. Those coupon codes are good for anything you buy in the show. They're good in any Zoe's Treasure show for the whole year. So if you're interested, I have a bunch of stuff in the bin, different PDFs, some books. I'll touch on the books in just a little bit. And other than that, that's kind of like all the housekeeping stuff. I'm modding a rain train right now, so you are muted. I want to buy something from the bin, so I will have, well, you are free to buy something, but you're muted. Type in the chat, honey. YouTube. Y'all, everything is multicast to YouTube. You do not have to buy something to rewatch. So you can rewatch for free on YouTube. Well, thank you so much. I appreciate that, though. We didn't type that fast enough. But yes, so everything is on YouTube. No need to buy just to rewatch. Only buy if it's really something that you want to buy. There is never an obligation of my shows to have to buy something. But I appreciate it. And if you do, make sure if you're getting any PDFs that you're DMing me your email address. My husband's pretty good. In the background, he usually sends that stuff out right away. Usually before the show's over. He'll send stuff out. All right, so let's talk a little bit about the Schedule C. And if you have questions about that, 1099s, home office, whatever it may be that's on your mind, feel free to throw it in the chat and I will try to answer them. Perfect. Thank you so much. So Schedule C, we're going to bring that up here in just a second. I'm kind of trying to buy some time. We have 9 seconds left on that giveaway before we bring up that Schedule C. And let's see who gets that first giveaway before I start the next one.
Yes, and if you're buying any PDFs, any electronics, deliveries, please send us your email address on a DM so we can ship it out to you as soon as possible.
And Shop with Shells, congratulations, you got that giveaway. I have a degree in management, finance, and marketing. Ooh, that's a good one. Yes, things have totally changed, but a lot of the basic concepts are the same. How we execute those concepts have changed, but the basic concepts are really still the same. The basic business, finance, and marketing concepts and accounting concepts really haven't changed in years and years. So let me start another giveaway, and we're going to talk about Schedule C. So let's bring that up, and let's just kind of go through. Tonight is just the top part. We're going to do the easy stuff tonight. Next week, we'll dig in a little bit more. Can you make that top part a little bit bigger, my love? All right, right there. So we are looking at this very top part of your Schedule C. And this is the easy part. This is the part you're like, I know most of this information, right? But some of them may be a little tricky. Name of proprietor, that's you. That's your name. So Bob Smith, whatever your name is, you're going to put your name of proprietor there. If you are a husband and a wife, there can be special rules. However, usually for a husband and a wife, you pick which one is the main person for the business. That's the easiest way to do that. Usually it really doesn't matter which one of you pick. Whoever spends the most time in the business, put that person on there. Just keep it easy and just make sure you use the same name year after year. That's the most straightforward way to do it. Then after that, you have, scroll over to the other side so we can see after the name, honey. We're going to scroll. Social security number. You got that. Don't put it in the chat. We don't need to, we're not disclosing any PPI here, but you know what your social is. So whoever's name goes in there, that's where their social goes. Then let's scroll back over. We're going to go to the next one. Principal, business, or profession. So thank you, I Love Discounts. I'm going to go open a couple credit cards in your name now. Okay, principal, business, or profession. Here's where you want to write what you do. And it doesn't have to be some big, long, fancy thing. It could just be online sales of vintage decor, online sales of women's clothing. Sweet, to the point. That's all you've got to put on there. And if you don't want to put, you don't even have to necessarily say vintage decor clothing. You can put online sales, online auctions, something along those lines. You can even just put reseller of general merchandise. The IRS just wants a general idea. Why? Because your business expenses need to be ordinary and necessary to what you're doing. So if you say that you're a reseller, but you're out there buying stuff that a reseller wouldn't buy, then the IRS may be like, why do they have these kind of expenses? So they're just kind of trying to keep you all in line. That's what they're doing with that one. So after we do our principal, business, or profession, let's scroll over to the side there, my love. We are going to do enter code from instructions, okay? Now this sounds confusing. This one really isn't. This is an AICS code. This is just a special code that the IRS is going to assign to your business. Now, if you're using any type of software, they're probably going to have a drop-down box that you can go and search. I am looking right now at the IRS list of it. You can also find it just by Googling the code for the IRS. What this is there are a ton of 6-digit codes that cover all kinds of different business types. And so besides your description, the IRS just wants you to nail down a little bit more exactly what your business does. Most of us, I'm looking here, most of us are going to fall under, where is it here? I just had it a minute ago. Most of us are going to fall under, down here, retail trade. And there is a code that basically it says you're going to pick the code that is closest to what you sell under retail trade. So for example, if you sell jewelry on Whatnot, you would pick a code that is 458-310. So you look at the list, you find what you sell, you put that code in. Really straightforward. It's not confusing. Again, if you're using any type of online software, it'll probably be in a drop-down box. You could probably even start to type jewelry, clothes, retail, something like that, and it'll help you narrow it down. If all of that, you're like, heck with that, that's a lot of work. Here's the secret. This is like the secret code right here. It is 999000. That is an unclassified establishment. This is like, look, I can't find my code. I don't know what you're asking, IRS. I'm throwing 999000. It's like the cheater's code. I've used it quite a bit. If you can't quite nail down what your code should be.
That's right. Keep it a secret.
Yes, keep it a secret. It doesn't raise red flags. You're totally okay if you use that code. All right, let's go back to the other side. Then we do your business name. If you have a separate business name, you would put it right here. It doesn't even have to be a DBA. It doesn't have to be any name that legally exists. Zoe's Treasures doesn't legally exist. It's a name I made up for Whatnot, right? Kexram, congratulations. That giveaway is going to you. But I could still put Zoe's Treasures in there. Do I? Oh, that's my favorite question. Even if you don't have an LLC, yes, you can leave it blank, or you can put I would put Zoe's Treasures. So let's stop on Schedule C real quick. We're going to divert and talk about an LLC. Those of you, Southern Charm is sitting there in her house right now going, uh-oh, here she goes, because she's heard me give this answer quite a few times. I do not recommend I recommend an LLC if your facts and circumstances support an LLC. Here's what happens. You come into Whatnot, and Bob Smith's attorney said, hey, Bob, you need an LLC. Now, Bob thinks everybody on Whatnot needs an LLC, so he's going around telling everybody, oh, you're selling on Whatnot, get an LLC. Or you start selling, and then you go into some of like QuickBooks or some of these other softwares, and all you see are ads. We can create your LLC. All of this messaging starts making people think, oh, I have to have an LLC to do this. You do not. The minute you go into business, you're called what's considered a sole proprietor. That is a classification by the IRS saying you are doing business. Now, there's different types of legal and liability that kind of falls under each one. We're not going to dive into all of that. However, the LLC is only necessary in certain circumstances. As a sole proprietor, you file a Schedule C, the taxes are on your personal tax return, you're good. Some of the benefit that an LLC will give you is it separates you as a separate legal entity. That business is here as a legal entity, and you are here as a legal entity. So it creates separation in your liabilities. So people are like, okay, well, if I get sued, they can't take my house or my retirement because I'm operating under this LLC. There's a smidgen of truth to that. People also tend to think I need an LLC for tax purposes because there's all these tax write-offs I can get as an LLC. There is zero truth to that. As an LLC, a single member, just you, Bob Jones, doing a LLC, you are still filing a Schedule C tax return. you're filing the exact same tax return and have ability to write off the exact same stuff as a sole proprietor could write off. So for tax purposes, if you're a sole proprietor, LLC doesn't give you extra tax benefits being an LLC, as far as what you can write off and how it ultimately flows through to your income. And that's if you are a single member LLC, just you. I created this LLC. Now, if you create an LLC with your cousin because you guys don't file the same tax return, now you've created a separate entity and a separate tax return. So not only are you doing your tax return, now you got to do this corporate tax return, this LLC tax return. So now you have more responsibility. There's a lot of legal obligations that come with an LLC. It's not something to be taken lightly. It's not something to just be like, oh, I need to do this because I'm in business. Some of the reasons you may want it: you do payroll, you have employees, you are in a niche or a business that is highly litigation. It's open to a lot of lawsuits. If what you're doing, if I'm working in a manufacturing, that's open to a lot of lawsuits, right? Because I could build something wrong, it could fall on somebody and kill them and hurt, severely hurt them. Maybe if you're selling certain food or healthcare products that could maim or hurt somebody, that may be an industry that's open. So gems and pottery, how many people are going to sue you over a broken piece of pottery? So you've got to really look at a lot of things. You need to look at what type of assets do you own in your business? Do you have real estate? Do you have a warehouse? Do you have a storefront? Maybe that might be a reason to have an LLC, because you want to ensure that there's liabilities just inherent with people coming into your place of business, right? If you want to look at what are your future growth plans, where do you intend to take the business? So there's not like a yes or no question. Like, I can't tell you what to do. What I can tell you is to talk to a CPA and a financial advisor and be ready with how much money you're making, what are your projections, where are you going with the business, what assets do you own, what do you do? So they're going to ask you all these questions, and then they're going to say, you know what, I think an LLC, it makes a lot of sense. Or they'll say, right now there just doesn't seem to be a reason why that would make sense. So that's my long LLC story right there. All right. And please, anybody, feel free to ask any questions. If I can answer them, I will. And if I can't, I'll tell you I can't.
Yvonne, I hope the question was answered. If not, go ahead and post it in the chat.
Rev, congratulations. You got that giveaway. Okay, let's go back to our Schedule C again. So we're going to finish kind of going just the top part. I think we left off at what code? Oh, we left off at business name. Okay, so if no separate business name, leave blank. It's totally okay to leave this blank. You don't have to do it. The IRS, they're not going to be like, oh, you didn't fill this out. They don't really care. So let's scroll back over to the other side. After business name, your employer, your EIN. Since I have an LLC, do you have to file as one? Shop with Shells. Are you a single member? Are you the only one listed on your LLC? Or do you have other people listed with you, like partners in your LLC, like in your legal documents? You're the only one, you're going to file a Schedule C. If it is just you, you are considered a single member LLC, and you're going to file this form on your tax return. So you do not need to file what is called a 1065. That is an LLC tax return. You do not need to do that. All right, so your EIN. Not everybody has an EIN. You don't have to have an EIN. An EIN is basically a social security number for a business. It's an employer identification number, just like it says right there, employer ID number. Reasons to get an EIN, they are issued through the IRS. It's about a 5-minute process. You can do it right online. Reasons to get one. If you are setting up a bank account in your business name, you're going to need an EIN for the bank. If some wholesalers may require you to have an EIN if you buy that way. Thank you. There's certain, I'm trying to think, some states, in order to get a tax exempt, they may require an EIN. But it's not absolutely necessary. If you actually have employees, you're going to want an EIN because you don't want to put your social security number on their W-2. You're going to put your EIN on there. But if you're not falling into these scenarios, an EIN isn't necessarily something you need to rush out and get. There's just no benefit to it. I am new to Whatnot and selling books. if I purchased books in 2025, but started to sell in 2026, when do I add them to your taxes? Another great question. So there's two ways to do this on your tax return. You can do it by cost of goods sold, or you can do it by the cash method or the accrual method. So the cash method says you're going to expense everything in the year you bought it. So 2025 tax return, but going by what you said, you haven't started selling yet. So if you're using the cash method, you would expense all of your books. But wait a second, you have no income. So is that expense really helping you to do the cash method? Probably not. So the other way to do it is the accrual method. That says that we only take the expense for the items when we sell them. So right now, those books are just sitting as an asset. All you did was trade some cash for some books. All you did. Your books are no different than cash. It's just in a different form. You've just traded one for the other. There's no expense there to take on a tax return if you're doing accrual. Now in 2026, every time you sell a book, however much you paid for that one book gets written down as an expense, which then you can take on your 2026 tax return. So the decision to do cash or accrual for your inventory is something you should really talk to your CPA or tax advisor about, because it can make a big difference. And in this case in particular, so let's think about this. You didn't sell anything in 2025. You're going to take, let's just say you spent $3,000 on books. You're going to take a $3,000 expense. You have zero revenue to offset. That expense isn't helping you save tax dollars, right? So you have a loss of $3,000. We're assuming you have nothing else going on your return. So you have a loss of $3,000. Okay, but it's not helping reduce taxable income. Now, if you wait until 2026, every time you make income, you're putting an expense and you're reducing what you're taxed on that income. It makes more sense. And there is nothing in the IRS that you're going to be like, it's a one-size-fits-all answer. You really need to evaluate the big picture. There are cases where, maybe you bought in 2025, and not you in particular, but maybe somebody bought some stuff in 2025. They dabbled a little bit. You can't necessarily carry forward the loss. Your loss can offset other active income. So if you have W-2 income, your loss can offset that income. So it is a way to help reduce taxable income as a whole if you have other things going on your return. So it is a good way, and that is a tactic to use. Who got that giveaway? I missed it. I was talking. I'm sorry, who?
Congratulations, B Squared.
Oh, B Squared got the giveaway. Congratulations. Let's just take the example of you decided in 2025, like, hey, I want to do some whatnot stuff. I bought some inventory. I sold a few things. I'm not really sure if I'm going to sell in 2026. I still have this inventory. Maybe I will. If you're kind of on the fence and you're like, you know what, I don't think I'm going to have income this next year, that may be a perfect reason to go ahead and do the cash method. So you could just wash out all the income you got in 2026 and buy yourself some time to figure out what you want to do in the next year. So I come back to, and I hate doing this, I hate to say there's no, I can't give you an answer, but it really depends on the full picture. What's happening in the next year? What do you project your income to be for the next year? Do you really need that expense during that time to offset the income? If you expect not to make a lot in 2026, maybe you don't need that expense then. Maybe it's better to take it in 2025. This is where a good tax advisor is going to look at everything happening with you and really come up with a plan. Taxes aren't just it's January, I got to do my taxes. Taxes are like a year-long thing. This should be a consideration that you're making quarter over quarter, and about halfway through the year, particularly if you are making money, you should be sitting down with the tax advisor saying, this is what I'm doing, this is how much money I'm making, and they can help design plans for you to put some into retirement accounts or do other ways to legally shield some of that income from being taxed. And they can also advise on, before the end of the year, maybe you need to purchase some bigger equipment, maybe you don't. So they can really look at all the different variables and help you come up with the strategy to where you're not just paying excessive amounts of tax. Nobody likes that, nobody wants it, right? Okay, let's go back to our Schedule C. Okay, so we left off with your employer EIN. So now if we scroll all the way back over to the left, All right, business address. That's easy. Y'all know where you live. Put your address in there. So I don't need to explain that. Now we're on line F. Nope, the other side. Line F right there. Accounting method. This, you have to pick a method and you kind of need to stay with it. So if this is your first year, you want to give some consideration here on what you want to pick. Cash or accrual. So this is talking about how you're going to expense, kind of what I was just talking about. Not just for your inventory. Your inventory you can pick separately, but this is overall. How are you keeping your records? Are you keeping cash? Are you keeping accrual? That's kind of a really in-depth concept in talking about cash and accrual, but basically cash is every time you get money in, it's taxable money. When you spend money, it's an expense immediately, no matter when it happens. Accrual is based on timing. Your expense is only an expense when it matches to your revenue. So it's all about the timing or when the actual use of that expense occurs. The easiest way to explain accrual is in December, you guys use electric, right? We're going to pretend that your house is a tax write-off. You use electric in the month of December. Do you always get your bill by December 31st for the month of December from whatever your electric company is? Usually not. Usually that bill comes January 5th or whatever, right? It comes sometime in January. Well, as of December 31st, guess what? You have accrued an electric expense. I've used electricity. I know I owe my electric company. That's an accrual. Cash would say, I didn't get a bill. I don't know anything. So in cash, you wouldn't have an expense until that bill actually shows up. For accrual, you have that expense when you incur the expense. It's more of an in-depth topic. We will go into cash and accrual. Back here real quick, I'm going to plug this since we're talking accounting concepts. So Ledger to Leadership, this is a free accounting course that I'm doing for resellers. This is going to start on March 2nd. It starts on March 2nd. It's going to be Monday nights at 6:30. It will be multicast to YouTube. So if that time doesn't work for you, you can always just go to YouTube and watch it if you're interested. That is going to take you, I'm going to show you the book I developed for it. The class itself is free. You do not need to spend a dime. You can show up on Whatnot. You can log into YouTube for free, 12 weeks, and you are going to learn how to go from an accounting equation to creating financial statements and knowing how to use those statements to make executive level decisions in your business. How do I read these numbers? What do these numbers mean to me? How do I make these numbers useful to make really good decisions on where my business is going? So you, again, don't need to buy anything. You can just show up and you can learn that. However, I also did create a book. This is in the bin if you're interested. There's the hard copy like this, our soft cover, let me explain it the right way, or a PDF. And this goes through the 12 full weeks of that course. And every single week we have your cover page, and it's broken into 5 sections. Here, I'll show it this way. It's broken into 5 sections. We have core concept. We're going to talk our core concepts. So you're going to get some notes about whatever the meat of the subject is. We're going to give you actual examples, real reseller Whatnot examples. We're going to have exercises where we're going to work through these during that Whatnot show. We're going to work through actual examples. Another example. And then every single week in the book, there are worksheets for your business that you can pull out, copy, use over and over that would be applicable for whatever concept we're teaching that week for your business. And then the very last page are CEO check-in. These are some questions to help you apply the concepts to your business or give you ways to think through those concepts. So if you're interested, the book, we have these books. They look just like this. It is a 158-page book. I did write this myself based on experience and a little bit of research. And to give a little validity to that, I do write trainings. I write corporate trainings for auditors in my real job. So I've taken some of that knowledge and skill and my accounting and applied it to this. So we're going to go through the whole 12 weeks. Again, totally there for you if you need it. Also a PDF version. But you can just show up with a pencil and paper and listen if that's more your style. All right, that's ledger to leadership. They're already all scheduled. You can go and bookmark those if you want to attend. All right, so let's go back to our Schedule C. So we talked cash and accrual. That's one of the things we'll talk about in ledger to leadership. So you're going to pick which one you want to do. If you scroll over, there's also an other. Right there, other specify. I have never used other. My whole career as a CPA, I've never seen other used, and I have never used other. It would be a super rare exception if you ever picked other. The book is, I think we have it for $70 in the bin. Let's see here. Am I right, honey? It is. The book is $70 and the PDF is $30. And those are in the bin.
The PDF is exactly the same thing as the book.
100% page for page.
The only difference is that you're going to have to print it yourself.
Yeah, you either have to read it electronically or print it yourself. But it saves you money if you'd rather go that way. Okay, let's scroll back over. So after we figure out if we're doing cash or accrual, the next question, did you materially participate in the operation of this business? The IRS is asking here, what they want to know is if you had active income or passive income. And this is how they're asking the question. They're asking it in more plain language. Active income means that you participated, you materially participated. And I'm actually going to go way back here. They have 7 factors. And if you meet any one of those factors, you are considered to have actively participated in your business. And let's see, that is line, scroll back over. What is that? What are we on, H or G? We are on G. So let's see, those factors are, and I'm not going to it's kind of boring language, so I'm going to paraphrase here. If you can say yes to any one of these, you actively participated in your business. You spent more than $500 500 hours during the year working on your business. That's not a lot. 500 hours a year? What is that? Let me do some math here. Let's see, 500 divided by 52. That's only like 9.5 hours a week. I spend more than 9.5 hours on Whatnot. I don't know about you. So that's an easy one. If that's yes, you don't have to go any further. You're active. Your participation in the activity for the year was basically all the activity. Nobody else helped you. The only way this business even existed was because of your efforts. You actively participated. You participated for more than 100 hours, and they give some other stuff, some other things about that. You've probably at this point have considered yourself active, right? The activity is a significant participation activity for the tax year, meaning you participated. It involves conducting your trade or business. Maybe you didn't sell, but you were the one doing all the sourcing. Maybe, your husband got in front of the camera because he loves to be on the camera, but you did all the sourcing, the packing. You're actively participating, right?
Thrifty Flamingo, thank you for your purchase. And if you can send us a DM, your email address and the choices of your PDFs, please.
The other factors really go into some specific industries that don't really apply to Whatnot. So you could see, if you spent at least about 9 hours a week, or if we can go down to the lower one, 100 hours a year, and you were the only one doing this business, you're considered active. That means you are participating, you are doing something. Why is that important? Because active income is taxed differently than passive income is taxed. So you're going to say, all right, what's passive income? Passive income is the income that you're getting for doing nothing. I invested in some stock. I sit back here and I watch TV all day and I get a big fat check because my stock is growing. Or I sell the stock and get a big check. That's passive. Passive could be my buddy owns a business and I gave him $5,000 as an investment and he writes me a check for a certain percentage every year. That's passive income. That's taxed differently. So you need to understand which one you are. It's pretty clear. Most of us doing Whatnot are active income. If you're anything more than just an investor, you're more than likely falling on the active side. So that's a pretty easy question once you start looking at it in those terms. All right, let's go back to our Schedule C. So we've answered if we materially participated. Are we doing active income? Next, if you started or acquired this business during 2025, that's an easy one. When did you start? If you started before 2025, this isn't your first rodeo. You've done a Schedule C already, or your tax preparer has, and it's on last year's tax return. Who's going to get that giveaway real quick? Linda, congratulations. You got that giveaway. For those of you just coming in, our giveaways are a CEO affirmation card, a vintage postcard, and actually we're going to send you 2 of these cards, one for you to keep and one for you to give away. You don't have to, but we're just trying to spread the love around. Okay. So did you start in 2025? That's like your address question. If you started this, what year you started. Then the next question. Here's where people get caught up, okay? Here's where the IRS is like, oh, I'm going to get you. Did you make any payments in 2025 that would require you to file a 1099, a Form 1099? What they're asking is, did you pay anybody under the table? Did you pay anybody cash? Did you have people that were not classified as employees in your business on payroll that you were paying? Did you have that shipper come in, paying them, $100 every time they came to help you on that Saturday afternoon and ship out your show? This is where they get you. If you say yes, you better be sending them those 1099s, because the IRS is like, where are they? I didn't get them. So here's where you're looking at, okay, I paid people cash, or even if I wrote them a check, they were not on payroll, they provided a service, I have to file a 1099. We're not going to go into all of the reasons you would file the 1099, but it's basically you paid somebody money to do a service for you and they weren't your employee. The 1099's thresholds on when you have to issue that are not the same as Whatnot has. When somebody's doing a service for you and you're paying them is different than us being on a platform. So off the top of my head, I want to say 600, but it changes annually. So that would be something, if you paid anybody, definitely talk to your tax advisor and say, hey, look, I paid these people. This is how much I paid them. It may be $650 this year. It changes frequently, usually annually. If it's your 14-year-old, there are some special rules for kids. So hold on to that. I'm going to answer that. So talk to your tax advisor, because legally you're obligated to do that. Now, what happens in real life? We have what the IRS says, and then we have what do people really do. And I am not advocating to not pay your taxes or do anything wrong. I am a straight shooter. I am like super conservative in my views of the IRS, in the sense that I follow the rules, right? I don't take a lot of risk when it comes to the IRS. They say to do it, I'm going to do it. But we all know, you're like, oh, I only gave him, $2,000. They came over throughout the whole year. I paid him $2,000. He doesn't want to claim it, because the minute you file a 1099, the IRS is looking to the person who got the money to be filing that on their tax return. And you're like, I had an agreement. This guy just needed some extra money. He's a close friend of mine. I'm not going to file it. That's on you. Are you going to get caught? Maybe, maybe not. We all know in real life, it's like, oh, it's under the table. I don't have to do it. The IRS says you do. Are they like looking at all your bank accounts and stuff? Probably not. That's one of those things that's kind of like, are you going to not obey a traffic law? Or, you got to decide that risk for yourself. I would always recommend that just stay on the right side of the law. It's easier in the long run. Save yourself the headache. But we know what happens in real life. We all hear the stories. We all not participate, but hear stuff. Your 14-year-old, let's get back to that. There is a special tax rule. As a sole proprietor, you can pay your child who participates in your business without having to put them on payroll and without having to 1099 them. You can pay them up to, I want to say $13,000. Again, check with your tax advisor, because that's another number that changes frequently. Almost every year they change it for inflation. You can pay them up to approximately $13,000 for their services in your business. They have to have services in your business. They have to do something in your business that justifies that pay. Whether they're shipping, I'll give you an example. What we do with my 15-year-old, she is a competitive cheerleader. Her cheer cost a lot of money. Okay, you want mom to pay for this? Part of my business, not on Whatnot, but on another platform, she's in charge of that. She has to watch for orders, pull the orders, pack the orders, respond to inquiries, ship them out, tell me when we're low on stock, keep the inventory organized. And this is twofold. One, she's learning some darn good skills. And two, guess what? Now mom gets to take all that money that I spend on cheer, and that becomes her salary. That becomes the money that I'm paying her for her services, and it becomes tax-free to me. So if your 14-year-old is participating in your business, let your tax advisor know. Keep track of the time they're spending in the business, what they're doing, justify it, write it down, and talk to them. You will be able to write off some of that money as a legitimate expense for a child. And it's one of those great, I hate calling them loopholes, they're not loopholes. It's a legal way to reduce your taxable income. All right, and let's go back to our Schedule C. Legal loophole. I know, I just hate the term loophole because it just makes it sound like, I don't know. Well, I'll tell you why I don't like it in a minute. Thank you so much. If it is not your child, they become a 1099 person. If you're just paying somebody else's kid, they have to be on your tax return as a dependent for that, what I was just talking about, to qualify. So if they are not on your tax return as your dependent, nope, they're either on your payroll or they're 1099. All right, let's see. There is a question. I want to say 13,000. I don't have that number in front of me. Last year it was 13,000. Last, when I'm talking about when I did my taxes last time, it was 13. What I can promise you is that I will, look, I'm going to have to go and dig in a little bit. What I can promise you is that I will look it up and I will let you, the next show of this one, next Friday night, I will have an answer. You can try to research it right now. Look up sole proprietor, employment of child or family labor may find you, that may lead you to it. Okay. The next question is going to say, hey, did you make any of those 1099? Were you required? And then it says, okay, if you answered yes, did you file them? So that's it. That is the whole top part of that Schedule C. So that's a pretty easy part. Next week, I'm going to talk a little bit more about it in a second, but next week, see that next part there on the screen? It says Part 1 income. We're going to go over that section next week. All of that, including your cost of goods, which is inventory, your gross receipts. We're going to talk all about that next week. I want to go back to the Schedule C. So, and I get this question a lot. Some of you may know this and you're like, oh, this is so elementary. I know this, Tracy. But it is a question I've gotten, so I'm going to address it. This is just a form that attaches to your 1040. Did you find an answer? What is it?
According to what I just researched, it says that tax-free income for kids in 2025, children can earn up to $15,000 the standard deduction without owing federal income tax.
That's a little bit different than your sole proprietor, but we're in that range. We're around the $13,000 range. That's talking about a different rule in the IRS. Right now, I would keep it in your head. It's around 13. I will get you an actual for 2025 taxes what the definitive answer is. I just don't want to sit here and just like research and not pay attention to you guys. Excuse me. All right, let's take that off the screen. So the Schedule C, this is just a form that goes onto your tax return. All of us, we should all be filing a Form 1040. I'm sure you're all familiar with that. That's your standard tax return, right? Then if you itemize, if you have like real estate taxes, charitable donations, state taxes, you're also filing what's called a Schedule A. So you have your 1040 and then you have all these pages behind it. All those pages are just called schedules. The Schedule C is just another page, and that's where you report your business income. If you have more than one business, you report more than one Schedule C. You can put multiple Schedule Cs onto one tax return. Why would you do that? Why would you not just throw it all on one? Because remember at the top of that, we had to tell them what the business was and pick a code. So if your businesses, your different types of revenue don't fit under the same description and code, then you want to use a second Schedule C. For example, I don't do this personally, but for an example, you can do Whatnot and you can be an Uber driver. Those are two completely different businesses, both of which you would be reporting on a Schedule C, but you would need two different Schedule Cs for that. That's usually a question I get. Let's see. Let me do another giveaway. Let's see if we can get through all of them, all the giveaways. Do you guys have any questions? because I could just keep talking about taxes all night. I'm geeky like that. I love taxes. I could just start pulling stuff out of my hat here and talk about it. But I really would rather ask stuff. Keep going. Okay, what else are we going to talk about? On whatnot, does it become income once it's paid out or before? The minute you earn it, it becomes income. The minute that show ends, that's your income. Technically, even sooner. The minute they swipe, it's income. But basically, when the show ends.
One Georgia Peach, can you check your DM? I sent you a message earlier.
Like one Schedule C isn't bad enough. We're going to go through every single section every Friday night. It's really not as bad as it seems. And I don't say that just because that's like my thing. It's really not that bad once you break it down and piece by piece by piece. It becomes very overwhelming. What happens is a lot of people, and I'm not calling anybody out, but a lot of people don't take the time throughout the year to do proper bookkeeping. A lot of people are just like, all right, I'm making money. I'm spending money. Cool. I'm going to throw all these receipts in the box and take it to my tax guy. Well, there's actually direct sales and upselling. One or two. It depends. You have to define them a little more. Is direct sales, are you directly selling, I'm just going to say like clothing to people like through a storefront and selling clothing online? Like, I would need a little more description. That's why you pay CPA. Exactly. However, you don't want to just throw all those receipts in a box and take them to your CPA for a couple of reasons. We have two different scenarios going on here. We have what's called bookkeeping, accounting, and then we have taxes. They are completely separate things. Okay? You businesses, and every single one of you selling on here is a business. Businesses do bookkeeping and accounting to make good financial decisions, to know where they've been, to use that information as data to fuel the decisions they're making in the future. They need to know what their profit margin is, what their expenses are. They need all this information on a regular basis. Know any good preparers in Missouri near Branson? I do not. You can do a Google search, and here's one thing. If you're looking for a CPA, I mentioned this, was it on this show or did I mention it this morning? Any CPA, you can go to your state board, look up Department of Professional Regulation, Missouri in this case. All CPAs are licensed through the state that they practice in, and it's public information. You can check if that CPA has a good record, has any disciplinary action against them. So it's one of the ways, if you're looking for a CPA, that you can kind of vet them ahead of time. And then I say you need to go and meet them, and it doesn't have to be a CPA. You can have a tax preparer, which is different than a CPA. And one of the big things you want with a tax preparer, financial advisor, a CPA, bookkeeper, any of those, is to be able to jive with them. You want to have the same vibe that they do, right? I relate it to a doctor. You want to be able to go in and be open and honest and vulnerable and tell them really what's going on. So you need to find somebody that you feel you have that rapport with, somebody you can trust, to have those conversations. You're talking about the blood of your business. Money is the blood of your business. So you want to make sure whoever you have, that you can be honest. You can go into them and say, I don't know what I'm doing. I'm bleeding money left and right, and I don't know how I'm going to pay my taxes. Because they can't help you if you are not 100% open and honest with them about what's happening in your business. And that takes a lot of that's just as hard to do that as it is to go to a doctor and tell them everything that's going on in your body. Think about it like this. Personally, what's a couple of the things that in general society we keep hush hush? Your intimate relationships, fights with your spouse, and finances, right? These are things that we keep hush hush. So you've got to be able to talk to them about your finances. So that's a CPA. That would be anybody. You would need to vibe with anybody who you are hiring to do bookkeeping, accounting, CPA, financial planning for you. You have to be able to speak openly and honest with them. And that's not something you're going to hear very often. And this is why I say go and interview. Most of them will do free consultations. Find one that you can talk to. Ask your friends. Do you have friends in business in Missouri or in your area? Who are you using? Call up your friends. Do you work at a 9-to-5 job? Who are they using? A lot of times they'll have smaller regional firms that can help you out. Yep, yours had issues, 3 years of them. Tennessee Honeysuckle, congratulations, you got that giveaway.
Congratulations.
Let me read this. Let's see. Yours had issues, 3 years of them. I just asked for my documents back, and then she said she closed in 25, but forgot to tell us. See, yeah, you've got to look. They're people too. We're people. CPAs are people, and there's good ones and there's bad ones. Just like sellers on Whatnot, there's good ones and there's bad ones. So you got to stay on top of it. The smaller you go in firm size, in a CPA firm size, if I wasn't working for a large accounting firm, I can go open my own CPA business and just be me, myself, and I am my CPA business. That's a very, very small firm. There's a lot of risk in that, right? Because it's just me. If I get sick, I get hit by a bus, my kid gets really sick, my husband gets really sick, a multitude of things could happen. I decide I want to move to a different state. So many things could happen to me because it's just me, where there's nobody to step in. So those are some of the things you want to consider. What is the size of the firm? If this CPA were to leave and go to another firm, are there two or three others, at least two or three other CPAs in the firm who can take over your work? Some of the things you want to think about. Is there a place on Whatnot that tells you the total of how much you made for the year? So yes, there is. Dragonfly Divas. If you met the threshold for a 1099, $20,000, 200 sales, Whatnot would have sent you a 1099 through Stripe. If you do not have Stripe, you will not get one. If that's the case, or if you made less than that, go into your seller hub under finances. There is I think it's called statements and reports. There's a drop down box, and you can get reports by day, week, month, or year. So you can go to the annual reports and pull the 2025. It's going to tell you your total revenue, all of the fees you paid, and all of the excess shipping that you paid as a seller. So anytime you hit adjustment and it said, okay, you can make this adjustment, but you owe $4, it's going to put all of that into one nice report. Because you asked that, I'm going to harp on something here for a second. And I'm not calling you out. I'm saying this in the most loving way possible. Because you asked that question, that tells me that you are not already looking at your reports on a monthly basis. So if you're not looking at what's happening to your business throughout the year, I'm kind of going back to my bookkeeping versus taxes. How do you know how much money you're making? Just a question. Yeah, it could be shocking. If you don't know how much money you're making, how do you know if you need to pay estimated taxes? You won't. That's when tax season comes and hits you hard. And you don't want that to happen. Every one of us should be pulling a monthly report and recording it in our books on a regular basis. It doesn't mean you have to be some accounting guru. Some basic numbers need to be recorded every single month. It also helps with what if, just what if. Who has ever experienced a Whatnot glitch? Any kind of glitch. Has Whatnot ever been Whatnotty for you? Okay, yep, I know. I mean, it has, right? Do you think there's a chance that something could go wrong on the accounting side on Whatnot? Pretty darn easily something can go wrong, right? It's relying on humans who programmed it, or humans in the background inputting information or doing something with it. Something could happen. And I'm not saying it's going to or it has, but there's a chance if you are not looking at your Whatnot reports. Say for the month of January, you know you made $4,000 revenue, gross revenue, you made $4,000. And then you go and pull your Whatnot report, and the Whatnot report says you made $12,000. Do you want to know that now and get that fixed now? Or do you want to wait a year? What do you think the odds, if you wait a year to find out that information because you didn't pull any reports, that you're going to be able to get that fixed, that you're even going to remember what happened? Because Whatnot is going to say, we made a mistake, show us your records. And you're going to be like, oh, I don't have any. All right. So it's not just about using data to make decisions. It's about protecting yourself. Documentation protects yourself. So understanding, looking at the reports and knowing what those are. That brings me kind of back to, this giveaway is about to go, so I'm trying to take a breath while the giveaway goes. That brings me back to your 1099. If you're not recording information all year long, How do you know that 1099 is correct? That's Whatnot's record. That's Whatnot's story. Who's telling your story? Your financial story. Simply Smarter Shopping. Congratulations. And I know I'm pounding this in, but it's vital that you're keeping some type of records. So when we talk about our revenue, let's talk a difference between gross and net. How many people record their gross amount versus what they pull out from the bank, or like what you take from Whatnot? What do you consider what you made? The gross amount of the show, or what you actually said, hey, put this in my bank, Whatnot? All right, net, bank. Do you know what you actually made? Gross. So if you made $2,000 on a show, they take out all the fees, any shipping adjustments that you might have had to pay for, any promotions you did during that show, and that's what's left to put in your bank. That's your net. You need your gross. Your gross is what you made. So the gross goes into your books, and then you record the other stuff as expenses. Because what's going to happen at the end of the year on that 1099? That 1099 is going to show the gross number. So if you're recording what goes into your bank, if you are like, I don't like bookkeeping, at the end of the year, I'm going to pull my bank statements, I'm going to add up all my Whatnot deposits, that's how much money I made. That number will never match your 1099. Never. And then you're going to go to Whatnot and you're going to say, you gave me a wrong 1099, this doesn't match, and Whatnot's going to say, show me the records. And you're going to say, here's my bank deposits, and they're going to laugh at you because you didn't record gross. True story. That's what happens. And it sounds like, I'm like, oh, I'm drilling on you. And I'm not, never. I just want to prevent this from happening. What comes into your bank, that's cash flow. That's an accounting entry just to record it on your books, but that's cash flow. That's just the movement of money. That's not what your revenue and your expenses are. I just print out both reports from Whatnot, one before fees and one after fees. There you go. So you can print both. So then you get one before. That monthly report, Whatnot releases the monthly report on the 4th of every month. So February 4th for January, March 4th for February. I have it on my calendar every month on the 5th. Go pull your reports. I usually do. I'm looking at stuff a lot more frequently than that. But on the 5th of every month, I have a reminder. Go pull your reports. And it's not like you have to like download them and print them and analyze. You don't have to do all of that. Download them, look at it. Does it make sense for what you're expecting? Does this match to what you think should have happened? Are all these numbers good? Maybe you want to do a calculation or two and then save it on your computer somewhere so you have a record of it. That's all it takes. All right. What else are we talking about? We have 2 minutes on that giveaway. I've got about 3 giveaways left, so I was hoping to go just a little bit longer. Are there any questions? What are you struggling with the most right now? It's tax season. It's on the forefront of our minds. What are your guys' is like, oh, this is giving me so much anxiety? What happens if you purchased a vehicle for business before getting an LLC? So the vehicle wouldn't have been titled in the business name? Did you have it retitled into the business name? And is it a single member LLC or a multi-member LLC? Those are some of the questions I would ask to figure this out. If you purchased it before getting an LLC, but you can still file, let's take a step back. With vehicles, you have 2 choices. You could take actual expenses of that vehicle, or you could take mileage. Actual means that you need to have that vehicle titled in the name of the business. And you're taking all the maintenance, new tires, all the gas receipts, the insurance you're paying, all of those actual expenses. In your case, you probably can make a case for that. You would have to show that that is not a personal vehicle. You're going to be somewhat hard pressed if you bought it before you created an LLC to say it's not personal, but you would have to really document. The other one is you just take mileage. They give you 70 cents a mile for last year. You're recording your mileage, and you just take mileage. Let, let's see, what is, I earned 706 on whatnot, but my net was 588. Oh, I'll go up. Hold on. I'll go back to that question. I'm trying to go in order. Warning from everything I didn't do that I need to be organized. There you go. All right. You can download. Yes. And what is a good bookkeeping app? I used QuickBooks, but it's expensive. It is. Thrifty Pink Flamingo, congratulations. You got that giveaway.
Congratulations.
QuickBooks is expensive. It's probably one of the better apps out there. However, I've heard Reseller Genie is very good. I've heard other ones mentioned. I, as a CPA, will not recommend any app. It already sounds, because you've said that you've had QuickBooks, that you're more technology inclined and you like some type of a accounting application. QuickBooks is probably the best. Honestly, Intuit, who makes QuickBooks, has been around for at least 30 or 40 years, if not longer. They're pretty darn good. However, Reseller Genie would probably be next on the list to check out. I've heard really, really good things about that one. And you can always go old school. You can always go back to Excel. I always recommend do whatever's going to work for you. Like, if you're not techie and you want to do it on pencil and paper, do it on pencil and paper or do it in Excel. Me as a CPA, I used QuickBooks last year. I was using Excel last year. I'm like, you know what? I'm going to use QuickBooks. There was some reasons. I like that QuickBooks has a mileage tracker right in the app. So basically, every time I'm driving, I don't have to think about it. It records it for me. I didn't like it. It was overkill for me. I felt I was spending more time than necessary adjusting numbers within QuickBooks and categorizing things, where I could do it faster in Excel. So I've gone back to Excel because that's what works for me. So if you take, so if it's a work truck, you could probably claim all of that. If you take mileage, then you can't also take correct. Which one is it, honey? I'm sorry. I can't hear you.
I earned.
Oh, I missed one. Sorry. I earned 706 on whatnot, and my net was 588. Well, you will not get a 1099 for that. No. You still need to claim it, still put it on your tax return, but you will not get a 1099 for that. If you take mileage and you can't take gas, correct. The mileage that the IRS allows you, that's 70 cents per mile, covers wear and tear on your vehicle, gas you use, insurance you're going to be using for that vehicle. So the IRS says, hey, 70 cents a mile, and that adds up. That adds up really, really, really quick. That covers all of that. So you don't need to keep as gross or net. As gross. You take it as gross. You put the gross amount under revenue, and next week we're going to go into the revenue section on Schedule C. You put the gross amount on revenue, and then you will list your fees under expenses. So the fees become an expense. And I'll show you how to do all of that next week. We always take our gross. And this is what I'm saying. If you guys just look at what goes into your bank account, that's your net. That's net before operating expenses. That will never, ever match. And that's not what you need to report. Because keep in mind, when the IRS is sending you a 1099, they're also sending a copy of that. When Whatnot is sending you a 1099, they are also sending a copy of that to the IRS. So you want to make sure that, one, the 1099 is correct. And the only way you're going to know it's correct is if you can match it up to your records. And then that you're reporting the same income on your tax return. Because if not, if there's discrepancies, if Whatnot tells the IRS you made $40,000 and then you tell the IRS you made 30 because only 30 got deposited into your bank, the IRS is going to think that you're not reporting $10,000 of income. That's an instance that will set up a red flag. Those are the type of things that the computer systems on the IRS side match up. Think about how simple that is. That is a simple matching process. In a computer, it takes a millisecond for them to match those things up. And that's when it starts shooting out error reports that lead to audits. So that's why we want to make sure that we're reporting gross and not net. Now, the net, eventually you're going to get down, you're going to take all those expenses, you're going to get back to what you put in your bank account. That's fine. But you want to make sure it's classified appropriately on your tax return, because why give the IRS any fuel, right? Why give them any more fuel to come after somebody? Now, let's face it though. How often do people get audited? I have been audited twice in my life. The first time I ever started a business of my own, I got audited. And then I had some weird stuff going on, a bunch of weird stuff on my return, made it look like I had excessively high income. I really didn't. But it was a very unique situation. The first year business was one of those things that maybe would have like just raised eyebrows. It doesn't mean that just because you're first year, you're going to get audited. But it's one of those things that's a little more riskier when it comes to a tax return. The odds, the IRS audits like, I don't know the exact number, but it's like 2 or 3% of all tax returns. Think of the millions of people filing tax returns. The amount of people that actually get audited, one Georgia Peach, congratulations, are very, very minute. So the odds are probably better at winning the lottery. I don't know if the exact works out, but it's not high. I just got an LLC in December. Okay. Started Whatnot in July. Am I filing income as a personal income on regular taxes or retro as a business? I just got an LLC in December. Are you a single member LLC or is this LLC with a partner? That would be my question. Then if you are a single member LLC, you are filing a Schedule C. It doesn't matter. There's no retro as a business. You were a business the minute you started selling, and that's how you're filing a Schedule C. You're going to put your LLC information on your Schedule C, but you're filing the exact same tax return as you would if you never got your LLC. And this is kind of my thing on LLCs, is everybody's like, oh, go get an LLC, it'll save you on taxes. It really doesn't when you're a single member LLC. It's the same form, the same rules.
Yes.
So, all right. Y'all, thank you for the questions. We're going to do, we have this giveaway going. So what's the benefit? So the benefit of having an LLC depends on what your assets are. Do you have employees? What your goals are? When you create an LLC, so right now it's just you, you're a sole proprietor, okay? You are responsible for all of the liabilities in your business. I put my husband as the manager. Yes, that's still single. You and your husband are considered one on your tax return. That's still considered single. And then on your tax return, you're putting your name, your social on that Schedule C. So you file a joint return, but that Schedule C, where we just looked at it, has the name and the social, you'll put yours. So when it's just you, there is no separation between Tracy and Zoe's Treasures. We are one and the same. I'm a sole proprietor. When you create an LLC, that is a separate legal entity. That entity, the LLC, is responsible for the debts of that of the LLC. There's a separation there. So now I have Tracy and I have Zoe's Treasures LLC over here. Two separate legal entities. The problem comes in is that people don't realize that with that LLC being a separate entity, you have to treat it as such. You have to be doing all of your bookkeeping. You have to keep annual minutes. You file an annual registration with your state. You create a corporate veil over your LLC. It is very easy to what we call pierce that veil. If you do not treat it as a business, if you mix personal and business funds, you have now pierced your corporate veil, and all that liability protection you think you've just created has flown out the window, because any good attorney will come right in and say, I don't care that you file an LLC, that's on paper only. You didn't treat it as a real business and as an LLC, therefore opening the door for me to attack your personal assets. High level, that's very untechnical way of explaining it. I am using TurboTax, but I'm going to, before I answer this question, I'll get back. Now, I kind of went off on the dark side with the LLCs, but there are circumstances where it makes sense. I'm not against LLCs. It depends on your facts and circumstances. If you're in a business that's highly litigated, that means you're doing something that has a high probability of lawsuits, an LLC may make perfect sense, right? Because you do want to protect things. If you own assets such as warehouses or other properties, you may need to put those assets under an LLC. If you have payroll, if you're expanding, if you have growth plans, if you go into partnership with somebody else that's not on your tax return, you may need an LLC. There are very legitimate reasons to have one, but there's also very legitimate reasons not to, and people tend to jump into them far sooner than they need to complicating their situation when they don't need to make it complicated. All right. I am using TurboTax, home and business. Awesome. We have a W-2 and a sole proprietorship household. There you go. Let's see. Was that a follow-up? No. Okay. So yeah, and that's TurboTax is perfect. And everything I've said applies directly to you then. So you're going to do your 1040, you're putting your W-2 income on there, and you're going to do a Schedule C and put your sole proprietor. All of it's going to merge together and give you a bottom line on your 1040 that you'll have a tax liability. And then if you've paid in enough on your W-2 side to cover your taxes, you get a refund, or maybe you'll owe a little bit at the end of the day. Let's see who's getting that giveaway. Thrifty Pink Flamingo, that is going to you. Congratulations.
Congratulations.
That was 2. All right, that means you have to go buy a lottery ticket. That's the rule. You get win 2 giveaways. It's your lucky day. All right, y'all. With that, I'm going to probably raid unless there's other questions. I was trying to, I have somebody who's doing a show and I kind of wanted to raid into her tonight. Yes. And Simply Smart shopping, Simply Smarter shopping. You raise a good point. You are taking more money to pay into federal tax returns out of your 9-to-5 job, out of your W-2 job. That is a brilliant way to cover your tax liability. If you guys are not working another job and whatnot is your sole income, I urge you to really get a handle on your finances and read up on estimated taxes. I have a PDF that makes it really simple, goes through various scenarios, but you don't have to buy that. You can just go to irs.gov, Google estimated taxes, and it'll walk you through everything you need to know about them. Make sure that you're aware of what they are and when they would apply to you, because it's so much better to know ahead of time than to get stuck at the end of the year owing a ton of money.
And if you still have any questions, come join us.
Maybe off subject, but how do you put into Social Security? So at home with Chris, if you are a sole proprietor, you will be paying self-employment tax. So think about it like this. When you work for somebody else, when you're a W-2 employee, they give you a payroll. You are paying half of your Medicare Social Security tax. Your employer pays the other half for a total of 15 point something, 15.4, I don't know, 15 point something percent. So basically your employer covers half of your Social Security Medicare, you pay the other half. When you're self-employed, there's nobody to pay that other half. You, as a self-employed person, are responsible for all 15 point whatever percent. So when you file your Schedule C, there's a part on that Schedule C on the net income. It says, okay, this amount is subject to self-employment tax. And that's additional tax based on your net income or your net profit on your Schedule C that you will pay with your tax return. So you as a self-employed person cover all of that, and part of it is your Social Security. I sell vintage decor and sterling silver jewelry, not at the same time. I have different shows. And I do a lot of tax talk. So I do a lot of these type of shows throughout the year. This year, I'm very heavy into bringing accounting and tax to Whatnot resellers. So every Friday morning, I do a 7 to 9 o'clock show where I do a business topic and a tax topic. And then Friday nights here, I'm doing tax for now. After the tax season, I'll switch to another type of topic. If you see this back here, Ledger to Leadership, starting March 2nd, I'll be doing a accounting course, a 12-week accounting course for resellers. So I spend a lot of time, in addition to my vintage and jewelry, bringing accounting and tax and bookkeeping type information to Whatnot. Let's see, another question. What did I miss here? Oh, thank you so much, Ranchan Fines. Let's see, thank you. Oh, you are very welcome. Thank you guys for being here. It makes it so much better when I'm not talking to myself, so I really appreciate it. How often per year are you required to pay that? Estimated taxes, every quarter. So real quick, high level estimated taxes, then we're gonna go rate. Basically, the IRS says you need to look at your last year's tax return. There is a line on your last year's tax return that says tax liability. That is the amount of tax you would have owed, okay? Not your refund, not your overpayment, tax liability. This is how much IRS says at the end of the day, when you count everything in, this is your liability. You look at that number from last year. This year, the IRS says, okay, whatever that number was in 2025, If you expect that tax liability number to be $1,000 or more, we want estimated payments. We want that money timely throughout the year, and timely to them is every quarter. So this is why you need to know what your income is and what your projected income is, so you can start judging if that tax liability number is going to be over 1,000 or not, so you can pay into those estimated taxes. The PDF that I do sell does like detail that out, very plain English, walks you through that. It also walks you through various scenarios. You're a full-time reseller or you're a reseller with another job, and how do you pay that in? When do you pay that in? How do you figure it out? How much money you should set aside to pay in for that? All of that is in that PDF. But that's a high level of estimated taxes. We will, if you look at these shows, I'm going to be talking about a different section of our Schedule C. When we get in about, yes, there is a penalty, a fee, and there's an interest that's due on the money. So you've got to pay the money, you got to pay the tax. There's a penalty, and they will charge you the interest that they lost on the amount that you didn't pay them. So if you owed them, say, like $1,000, there's a certain interest amount too applied to that you have to pay on top of it. It becomes very expensive very quickly. And nobody wants to get caught with that in April. There should be no reason, before we close, final thought, there should be no reason. It's in the bin. You can go straight to the bin. You buy it. You message me with your email address, and my husband will send it right out. You'll have it within the next 10, 15 minutes.
You click the shop and go to the buy it now.
Yep.
And if you do so, send us your email address on a DM,
yep,
so we can ship it to you as soon as possible.
There should be no reason that you come into February and you're panicked about what's going to happen on April 15th or when you file your tax return. That shouldn't be a thing. My goal is to wipe that out. Am I going to be successful and wipe that out from everybody on whatnot? Probably not. But you know what? I'm doing my best at one person at a time to make you feel more comfortable, because I want to take that anxiety away. All it takes is a little bit of time throughout the year. Thank you so much. I appreciate it. I try to make it real. Thank you. So if you're paying attention throughout the year, tax time should not cause you anxiety. All right. With that, you guys.
And I'm going to plug something else.
What is he plugging?
If you'd like to hear anything business related, we would like to invite you to join us every Sunday at 6:30 p.m. Eastern Standard Time with Reselling Roundtable on YouTube. It's 4 different panelists. Green 13, a seller and whatnot. I Love Discounts, and Zoe's Treasures.
So all three of us, 6:30 every Sunday night. That is 6:30 every Sunday night on YouTube. It is a live chat. You can ask questions. We respond. But we all come from different backgrounds. We're all whatnot and other sellers, and we talk about all platforms, all things reselling. We debate hot topics. It's a good one, and you can actually go check out a past episode to see if you like it. And with that, we're going to go raid. Hopefully Southern Charm is on. You guys, thank you so much for being here. I really appreciate it. We will see you again. Have a good weekend. And there she is. We're going to go raid Southern Charm. Bye, everybody.